in terms of what we've achieved over the last 18 months. We've got a lot of more to do. But if you take a step back and you look at Nigeria as a whole, you know, I think the population, the increase in literacy rate, the dynamics of our economy is such that any real serious investor looking for growth, looking for diversification of their portfolio, and looking for, if you like, a market within perhaps stock currently between the frontier and emerging markets, but clearly making its way into the emerging market, you know, can definitely be part and parcel of that story.
We have today 5 million retail investors. The potential is enormous for people to take advantage of the Nigerian capital markets for wealth creation.
The performance of the Nigerian stock market in 2012 reflects its growing popularity in the context of frontier markets that have become the target of global portfolio investors. Many observers of the NSE say it has finally turned the corner, with local investors that shunned the market for the most part of the last 4 years gradually joining the party. The continuation of a reform program designed to create a world-class market would hopefully keep the bull market on track and vitalize the brokerage business of traders like Yomi Adeyemi, who are confident today that the good times are finally back to the bourse. Wale Famarewa, CNBC Africa.
It doesn't need to be loud to be understood. It doesn't need an orchestra to be a symphony. It doesn't need to compete to be at the top. It doesn't need a single word to say it all.
Sponsored by the Securities and Exchange Commission of Nigeria.
Yomi Adeyemi is a managing director with a unique story. His tenure at the helm of Fortress Capital began at the start of a stock market downturn that left investors and market operators bewildered as they came to grips with an unprecedented bear run.
I took over the management of this company in April 2008, to be specific. And for me, that was really when the market started going down. So obviously, from a business perspective, most of the projections that we made were really not realistic at some point in time. But behind all that, we have a very strong belief that the way the market works in cycle, that obviously the market was going to come back. So, and the only thing we just had to do was to tweak our strategy a bit, that we ensure that, yes, we try to minimize our operational cost, and look out for investments that we believe would give good returns.
The drop in brokerage business led to a focus on increasing operational efficiency and proprietary trading for many of the over 220 stockbroking companies that had to endure one of the longest and sharpest market declines in the history of Nigeria's capital markets. The brokers were a small part of a larger investment community smarting from huge losses.
I joined as the DG of the Securities and Exchange Commission in January of 2010 on the back of total investor apathy. We'd had an unprecedented decline in our markets. We'd hit bottom in February of 2009. The market cap was less than 4 trillion naira at that point in time. A number of investors felt they'd lost their life savings. Some had sold homes and put in the market. We'd had incidences of Ponzi schemes. We'd had a variety of market abuses, share price manipulation, insider dealing, and other forms. And so there was just a total crisis of confidence in our markets, and people were wondering where the apex regulator was at that point in time.
In 2008, the index was at 31,000 at the end of the year, and the market was down 45%. In 2009, the index had dropped from 31,000 in 2008 to 20,000 in 2009. The market dropped 33.78% in 2009. If you add the two together, it gives you the scale of how bad it was. There was a brief rebound in 2010 and the market went up 18.93. But if you know that the market had gone down 45% and 33% and was up 18%, for all practical purposes, it was still way, way down. In 2011, last year, the market was down 16.31. So basically, those 4 years captured the very worst. And what was happening was that people were losing, depending on what stocks they had bought, up to 70% of the value of their stocks. Some lost almost 80%. So basically, you bought something at 100, you were worth 100 naira. You were suddenly worth 20 naira. For those people that, the banks are no more, they've lost their shit. And you will recall that some of those banks were trading at some crazy price.
The market was clearly very overbought. It was really a bubble market. It was created by far too much liquidity. The reason for the liquidity was that the banks had just consolidated, so they were much larger, and then they'd come to the market and raised capital themselves. Now they had to spend that capital. And an awful lot of that money, which was leveraged, then went into the stock market. And it took it up to levels that were clear.